Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Bitcoin has reclaimed the $64,000 level, marking a decisive rebound from its June lows. This recovery is fueled by two converging forces: geopolitical de-escalation hopes regarding Iran and substantial institutional capital inflows. Spot ETFs recorded $85.9 million in net inflows, signaling renewed confidence among traditional finance players. The asset is testing key resistance levels, with traders watching for a sustained break above this psychological barrier to confirm a broader trend reversal. Meanwhile, the energy complex tells a different story. Brent crude remains stubbornly below $100 a barrel, defying expectations of a geopolitical risk premium. Despite disruptions in the Strait of Hormuz, prices are capped by a collapse in Chinese demand. Recent data shows a sharp decline in Chinese oil imports, while the International Energy Agency's latest stock release reports further inventory builds. The market is pricing in weak demand over supply constraints, leaving traders cautious about any upside momentum. In related news, the automotive sector in Turkey is witnessing a structural divergence. While the overall auto market contracted by 7.4%, electric light commercial vehicle sales surged by 146% between January and May 2026. This explosion is largely driven by aggressive adoption of Korean and Ford models. The data suggests that commercial fleets are prioritizing electrification to offset rising operational costs, even as consumer sentiment remains fragile. On the macro front, a significant shift is occurring in fixed-income markets. The tokenized Treasury market has expanded to $14.6 billion, indicating a rapid migration of capital into blockchain-based assets. This growth stands in stark contrast to centralized exchange volumes, which plummeted 11% to $4.61 trillion. This divergence signals a structural shift in how capital flows, with institutional investors increasingly bypassing traditional exchanges for programmable money markets. For individual investors, the focus shifts to retirement planning pitfalls. Retirees are facing a complex challenge with IRMAA surcharges triggered by traditional 401k withdrawals. As withdrawals increase modified adjusted gross income, many cross the threshold for higher Medicare premiums. Financial advisors are now recommending Roth conversion strategies or utilizing loan options to manage MAGI thresholds, rather than taking direct distributions that could permanently increase healthcare costs. Looking ahead to today's release, there are no major high-impact economic calendar events scheduled within the next 36 hours. Markets are currently digesting the geopolitical and structural shifts outlined above. Traders are waiting for clearer signals from upcoming corporate earnings and central bank commentary to dictate the next directional move. The absence of data releases allows the market to consolidate recent gains and losses without external shock. Investors should monitor the $64,000 Bitcoin level and the $100 Brent crude threshold closely. These are the critical inflection points for the current cycle. The divergence between crypto adoption and traditional exchange volume suggests a long-term realignment of financial infrastructure. Similarly, the energy market's weakness highlights the enduring power of demand-side dynamics over supply-side fears. That's your market briefing. Follow Rumour with AI for daily market intelligence.